Hey everybody, Courtney Smith here. Welcome to kind of a half holiday. Columbus Day, the stock market's open, but bond markets and banks in New York City are closed. It's a state holiday in New York, but not a federal holiday. So we're going to be trading on Monday. I'm looking forward to it. All right, let's go. Oh, I'm always looking forward to this. All right, let's take a look right here. So the dip that we were looking for in September looks like it's completely over. That we never really went into a major bear market. We went into a mini bear market, a correction of about 10%. So there you go. That may have been it. Now, the background conditions, the big picture still remains very, very negative with high debt levels throughout society. But for now, it looks like we're going to pass on it. We'll keep an eye out on it for you, of course, but right now we have to look more at a bullish scenario. Look at that purple predictor. Never really came under pressure during the dip, and now it's leading the market higher. It's almost about to make new all-time highs, which means, once again, it's leading the market. Dow Jones, similar situation, not quite as bullish though. The Dow seems to be lagging. The NASDAQ seems to be a little bit the leader here. Once again, look at that purple predictor. Very close to making new all-time highs. Seasonality. We finally broke above the previous highs and we're in the seasonally bullish period, which means that we now are in a seasonally bull market. Okay, very, very important. Now, what that means is that how I utilize this information is that we should be now putting on positions that are 50 to 100% bigger than we normally do. So if we normally would buy 100 shares, we should buy 150 to 200 shares. Okay, very, very important. This is one of the reasons why Wall Street Winners has been award-winning for 20 years. Okay, we do things differently here, and the use of seasonality to increase the size of our positions in bull markets is one of the critical components of why we crush everybody else as far as performance is concerned. Now, notice also the utilities moved higher. Now, their seasonal bullish period ends October 31st, but we're still technically in the bullish period, and now we've got the confirmation in Utes as well. So I'm buying Utes, I'm buying stocks. Got it? These are big, important things. We haven't really had bullish signals in either the Utes or the stock market for quite some time. Our seasonality indicator here from StockTradersAlmanac.com says the market should be choppy, maybe a little dip at the end of the week. Sounds fine to me. But what's going to happen is notice that the market starts to take off just before the election. What happens is the market doesn't like uncertainty. And right now, who's going to be president? Well, the market's uncertain. The polls, which are fake right now, say Biden. Even if I go through my adjustments, still looks like Biden, just not as much as what it looks like. But nonetheless, it's still wide open. There's lots of things that could happen between now and the actual election. So the uncertainty of moving to much more mail-in ballots is also not bullish for the market. But so maybe this week we'll have a little bit of a setback as we get up close to those old highs. Yield curve is moving more positive, which is more positive for the stock market as well. And in fact, I think this is one of the major reasons why we see the stock market starting to rally. Asset allocation starting to move in favor of the stock market over the last couple of weeks and away from the bond market. Our stock market RISKDICATOR, this has always been surprising to me, but we just made a new multi-month high on the RISKDICATOR, showing that the market is looking for risk. And that's bullish for the stock market. If you're not bullish on risk, then you go buy bonds. But instead they're saying, you know what, let's bail out of bonds. Let's buy us more stocks. Now, global shares almost at a new all-time high. So this is also pretty bullish. Now, bonds, as I mentioned, they're going down. And you can see early in the week, we broke to a new low on this move. And I think we're going to head back down to the low that we made back in June at about 153, which is a pretty significant drop in the bond market. And that's an increase in interest rates. So look for that to continue. I am short bonds right now. Our bond key factors, the same as they've been for quite some time. All of them are saying that bond yields should be higher. Well, if all the indicators are saying that it should be higher, guess what? It eventually will go higher, which means that the Fed may not be manipulating these long-term rates as much as they have in the past. Now, recently, some Fed governors, including Jumpin' Jerome Powell, have been talking about allowing inflation to go above 2%, 3%, 4%. That would suggest that interest rates have to go higher. And they've also been talking about how, well, we don't have as many bullets to fire. The government's got to do more fiscal stimulus because we can't do much. What they may be saying, let me try to translate Fed speak into plain English, we can't buy anymore. We've kind of run out of some cash for now. We don't really want to buy any more bonds. Well, if they don't buy the bonds, that means they're not manipulating the bonds, which means that bond yields will go higher, because if there's going to be 3% inflation, then yields have to be at least 3% to compensate for that inflation. Well, they're one in small change, which means they'd have to go into a major bear market. Dollar under pressure again across the board. We did have that nice rally. Now I think we're going to head back down to 92. Well, if it goes down, then gold goes up. And you can see gold has kind of been in a mini bull, but we're not really breaking above any significant highs. We broke down out of the pennant formation that I mentioned. Now we're starting to rally back up. But we need to get above that 1985 area before I can get really bullish at all. But it looks like we're setting up for that. In other words, the fundamentals are bullish for gold. We have to wait for the technicals to tell us exactly when to enter. Our gold key indicators, kind of a mixed bag, but I would say, top two are kind of bullish. The one on the bottom kind of bearish, but, there you go. All right, crude oil. The Saudis are coming back, and they had cut back production by almost 10 million barrels a day, or OPEC had, but that's mainly the Saudis. They came back this last week and said that, well, you know what? We had set up a schedule where we were going to add 2 million barrels a day every 6 months, and here we are. We're at our 6-month point where we're supposed to add 2 million barrels a day, but you know what? We're not going to. That's very bullish for the price of oil, and I think that's why we're rallying. I think we could get back up to that 44 level now. Bitcoin broke the pennant formation that we talked about last week. It's a legitimate pennant formation. We broke to the upside, so you'd want to be long. We broke above previous highs. You'd want to be long. We need to be long Bitcoin now. Get long Bitcoin. So officially we'll say we're long. But of course, I'm not putting, you got to be a fully paid up member to get specific trades. But let's just say I'm bullish on Bitcoin right now. All right, freebies, thank you for being here. Fully paid up members, hold on for just a second and we'll dive right in. Hey, freebies for Wall Street winners. Really appreciate having you here and love to have you participate in the Wall Street winners every week. But I also wanted to show you where I get a lot of my information and where I monitor my information, and it's from the Stock Butler, stockbutler.com. And what it is that it takes the system that I teach in my Stock Financial Freedom System course, my live 2-day seminar, and it codifies and systematizes and makes it super easy to use. Let me just show you some of the things. I would go there, read their literature. That's really great. But let me show you a couple of things that I use. So I always talk about in Wall Street Winners our best of the best stocks. Now, when you're a fully paid up member, you see my best of the best stocks. But for example, I can come up here and I hit rate and I go to best of the best and I click on it. Now I've already signed in. There it is. There's my best of the best stock. These are the best of the best stocks that you should be looking at buying. In this particular case, you can see the green one is a new one this week. So guess what? In the fully paid up section, this is a new recommendation. We also, Stock Butler also rates the stocks, A, B, C. Here is a change. This one was changed in its rating. So it does some amazing things. It makes it super easy for you to trade, to monitor. It also has other techniques up here. Our hot hands, our pit bulls, seasonality, advanced stock list, many different ways in order to find great stocks and then to monitor them. So when you click on one of these stocks, it comes back and it tells you how the rating occurred. Here's the actual analysis that went in to rating this stock a B. Incredible. And the cost is nominal. I highly recommend it. Go there to stockbutler.com and check it out. I think you're going to love it. Talk to you later.